Welcome to the Daily Business and Finance Show. In today's episode, we delve into Consumer Reports' latest ranking on auto brand reliability, discuss the potential merger between Cigna and Humana, and explore how Biden's EV rule could change subsidy qualifications. We'll also touch on Farfetch's stock plunge amid earnings delay and Richemont's investment stance, Salesforce's rally following strong forecasts, and the escalating tensions impacting Hess. Plus, we'll look at Snowflake's Q3 results indicating a cloud slowdown recovery, ARM's surprisingly minimal income from Apple despite massive usage, and BioVi's disappointing Alzheimer's study results. Stay tuned after this short ad break to learn more about these headlines. In a recent edition of Consumer Reports, it was reported that Asian car manufacturers, with Lexus at the forefront, excelled in reliability rankings. They achieved an average score of 63 out of a possible 100. European brands trailed behind with an average score of 46, while domestic brands were further back still with an average score of just 39. It was also noted that hybrid vehicles tended to have fewer problems compared to traditional combustion engines. However, plug-in hybrids and electric vehicles were found to have more issues, especially concerning their EV drive systems and charging systems.
Cigna and Humana, two health insurance giants, are allegedly discussing a possible merger. A deal involving both stock and cash is anticipated to be finalized by the end of this year. This development comes on the heels of rumors about Cigna contemplating the sale of its Medicare Advantage business. However, it's important to note that the approval of this deal is not guaranteed due to potential antitrust concerns. Similar issues have resulted in previous mergers within the industry being blocked.
The administration under President Biden is preparing to unveil regulations that will restrict tax credits for electric vehicles, or EVs, that incorporate components from foreign entities of concern. This could potentially influence subsidies amounting to $7,500 per vehicle. The objective of this action is to decrease dependency on Chinese companies for battery manufacturing. It may have implications on the sales of electric vehicles and the stock values of corporations such as Tesla, Rivian Automotive, Fisker, Lucid, and Polestar Automotive.
Shares in Farfetch have experienced a 54% decrease subsequent to Richemont's declaration that it will neither invest in nor provide loans to the online luxury goods firm. This development follows rumors of Jose Neves, the founder of Farfetch, contemplating making the company private. The unveiling of Farfetch's third-quarter results has been postponed, with an assurance for a market update in due time.
Shares of Salesforce experienced a 4.7% increase following the surpassing of earnings predictions. For the fourth quarter, the company is projecting revenues in the range of $9.18 billion to $9.23 billion, which exceeds the anticipated $9.22 billion. Additionally, an adjusted earnings per share or EPS from $2.25 to $2.26 is expected, which is above the projected figure of $2.18 per share. Furthermore, Salesforce has updated its revenue guidance for 2024 to approximately $34.8 billion, indicating an annual growth rate of 11%.
Yesterday, stock values for Hess, ExxonMobil, and Chevron experienced a drop. This was triggered by news of a possible invasion by Venezuela into Guyana. The contention is centered around the Essequibo region on the border, known for its oil wealth. As a referendum looms that could potentially incorporate this area into Venezuela, tensions are escalating. Concurrently, Guyana is emerging as an important new player in the oil industry with substantial offshore projects involving Exxon and Hess.
Shares of the data warehousing titan, Snowflake, experienced a 9% surge after a third-quarter report surpassed expectations. The company reported an adjusted 25 cents per share on revenue amounting to $734.2 million. Looking ahead to the fourth quarter, Snowflake is projecting a year-on-year growth between 29 and 30%. Furthermore, it has raised its full-year product revenue forecast from $2.6 billion to $2.65 billion.
ARM Holdings is facing challenges in raising royalty rates from Apple. Currently, Apple pays less than 30 cents per device for ARM-based chips. This leads to Apple accounting for less than 5% of ARM's sales, which is half of what Qualcomm and MediaTek contribute. Despite SoftBank, the owner of ARM since 2016, making efforts to increase prices, Apple continues with its existing contract until the year 2028. However, a new licensing agreement has been extended beyond the year 2040.
Shares of BioVie experienced a sharp drop of 69% following the company's announcement that its Phase 3 trial for the Alzheimer's treatment, NE3107, failed to meet crucial efficacy targets. This was attributed to protocol deviations and violations at 15 sites. However, despite these hurdles, data gathered from the remaining patients indicates that NE3107 might still possess potential influence on cognitive and functional endpoints. And that's a wrap on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep turning challenges into opportunities. I'm Montgomery Jones.
And I'm Amalia Dupre. Farewell until tomorrow. Have a good one wherever you are.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.